morning and welcome, Patriot Radio News Hour. Joe and Jason on this. What day is it? Is it a hump day? It's Wednesday. Happy hump day. Yeah. Tomorrow the CPI report is coming out. I think it's going to be low. I put it this way. Today is a day if you're like, okay, I'm kind of waiting here to jump in to gold or silver. I think today is a really good day. Obviously, we could be wrong. It's not like, I've got inside information. But the data that I do see, I think this number is going to be low. Well, lower. There's going to be, again, that same pattern of rate hikes are over and rate cut things. I think we're going to see dollar weakness. And I think we're going to probably see higher gold and silver prices. So it is a hump day, buy day, and we're going to help you do it. We had Silver Eagles on sale yesterday. I have them. I still have some rolls left. Now, this is limited. Limited rolls of U.S. Silver Eagles, $590 on rolls of U.S. Silver Eagles. We got about a case, about 25 rolls, give or take, remaining on those. On the gold side, $10 liberties. 1 through 9 at $1,110. Tell you what, you buy 10 or more, $1,100. You buy 50 or more, $1,095 on a $10 liberty at 800-951-0592, allamericangold.com. That is the website. Arlene is back. For all of you, I know we've missed her so much. Arlene had back surgery, and a big one. So she had been out for the last several months, but she's back. She's tough. She's got this back brace on, but she's roaring to go. So I know a lot of you have had her in your thoughts and prayers. She appreciates that so much, but she is back. So I know a lot of you want to reconnect with her. And Jason, it's kind of an interesting market. Pretty quiet today. The 10-year note right around that 4% level. But we got more data today that things are slowing down. Another warning from Jeff Gundlach saying people aren't ready. Jamie Dimon with a warning as well. But we had company surveys rolling in. People want to know, hey, are these layoffs going to start? Are they going to pick up steam? And the latest data out now says that 38% of all companies say it is likely that they will be laying off in 2024. Resume Builder was doing the survey. 52% are likely to implement a hiring freeze. Half say anticipation of recession is a reason for potential layoffs. Listen, none of that matters to businesses. I'll be honest with you. You know what matters? Are there people coming in the door? Do we have sales? Are sales good? The second sales aren't good. Jason, that's when they got to make tough choices.
That's how every business runs. Every business can only operate upon the success or the failures that they're dealing with. And so it's really interesting when you run the numbers, Joe, because half the time we can see things around us that don't really match what the numbers are saying. And then other times the numbers speak something and it makes perfect sense. And but you're completely right, Joe. When it comes to people buying your products, if you're a brick and mortar store, people coming in the door and participating in what your business is, when those numbers of people disappear, your business has to make decisions. You can sit there and keep paying employees for standing around doing nothing, and I think a lot of that's kind of happening actually in some of these businesses, Joe, because of the difficulty in 2021, 2022 of getting full employment. There was tons of jobs available and nobody was filling them. Right before the inflation came roaring in. Well, now we're in that situation where businesses are slowing down, and I think some of them are making the mistake, Joe, of holding on to employees and not paring down, probably thinking, well, it'll come back. It's been going up and down since COVID. It's just the way it is. Well, this could be an elongated, extremely bad time, especially for small businesses. You've got to pare down your businesses. You got to react.
3 in 10 saying that they are reducing or eliminating bonuses. 4 in 10 saying, hey, we're looking to cut costs with AI. Again, I think we'll hear more. And I think AI, I think that's probably in certain industries, right? Certain industries, AI may allow for people to reduce headcounts. But again, I think a lot of that AI maybe places that don't affect us here, because I'm thinking like call centers, right? AI now on the internet, right? You're talking to AI. You're not actually doing it with a human. I think a lot of those jobs, I don't know, some of them are here in the U.S., but I think a lot of those jobs probably are outsourced. But those are, I think the biggest thing was the amount of companies saying we expect layoffs this year, and the amount of companies saying, hey, we're done hiring as well. It's the first time since COVID where I've seen over 50% of the companies now saying, yeah, we're not hiring. That alone's a big change. Take the radio news hour. Listen. Good opportunity today on Silver Eagle $10 Liberty. Get them while you can. 800-95-459. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Wednesday. A quick look in at the markets. The Dow's up 20. The S&P's up 6. The Nasdaq's up 40. Right? The 10-year note sitting right around 4%. I think tomorrow's going to be the big indicator. If we see a soft inflation number, I expect that 10-year note to go back down below 4%, but we'll see. Crude oil's unchanged. Gold's pretty much flat. Silver's not doing much either. Everybody kind of waiting for tomorrow. We did get some movement. Bad news out of Japan. So the Japanese yen really sold off pretty hard today. Kind of took away some of the dollar weakness, but the dollar, the euro, the pound sterling rallying into this inflation number, and it's tough, right? Think about the survey and all these companies saying, okay, hiring. Here's the one thing I took from the survey. Hiring is going to go way down. Looks like a lot of these companies are like, okay, we had trouble getting employees. We kind of overstaffed, but now sales are coming off. And the overstaff's got to go. And we're going to see a lot less hiring. This was something we thought was going to happen last year. It just got pushed back a little bit. I think that's why Jamie Dimon, Jeff Gundlach warning about a double top in the S&P. We'll see. I don't know. There may be a little more room to run here for the stock market, but I'm going to tell you right now, diversification is going to be important, and especially, if you don't think the stock market's going to be up 50% in the next 5 years. And say, I don't know. I don't think so. I think that would be incredible. It's possible. I'll say that, because that would just mean, screw it, inflation's just going nuts, right? It depends on what they do. It could happen. The more likely scenario is 5 years from now, we're probably going to be real close to where we are today. That's why we keep talking about why refi. It's not correlated to the stock market. This is an investment that isn't correlated to Wall Street. Right? You get up to 10.25% returns. 10.2 fixed right? Which means it doesn't change. You can turn your income on, you can turn it off, you can do whatever you want to do, and get some more diversification in your portfolio. Do you put all your money into Y-Refi? Of course not. Do you put all your money into gold? Of course not. Do you put all your money into stocks? No. But check them out. If you got $50,000 or more, check these guys out. InvestYRefi.com or just call them at 888-Y-REFI-24. But inside this number, they were talking about Nike. Nike's the latest. You know what? Nike just got rid of Tiger Woods. No more Tiger Woods in Nike. I mean, that seemed to be kind of like Michael Jordan, right? They thought that was going to be an institution, but Nike is cutting costs. They're going to cut back over $2 billion, and they say job cuts are going to be a big part of that. We talked about Hasbro, the toy giant, laying off 20% of their workforce. The banks, so earnings season's kicking off. We're going to hear from banks. Expect profits to be down, and to be down probably double-digit plus. Citigroup already warning that they're going to be laying off. Most of the banks had said bonuses are going to be way down. Now Jamie Dimon, he's talking about the same thing. Spotify, they're another big company that announced layoffs. We talked about Flexport Logistics, right? They laid off 30%. Charles Schwab, they're laying off. So things are starting to grow on the layoff side of things. But here's something we haven't talked about: store closure. They're in this latest survey, they're talking about 3,000 retail locations that closed in 2023, but they're saying that, Jason, over the next 5 years, they expect 50,000 more retail closures. So that's, 3,000, you multiply that by 5, that's 15,000. So obviously they're saying the amount of retail stores that are going to close, and I think that makes sense, right? The Amazon model, the online model, and we haven't talked too much lately about office vacancies, but now retail vacancies, office vacancies just hit a new high. So this is going to be interesting when the banks come out with their earnings. How much more in loan losses are they going to be setting aside for the commercial real estate space? And now do we have to worry about the retail space on top of it?
Yeah, the commercial real estate, we've talked a lot about the stress because of the higher interest rates and those loans rolling over, Joe. So that's just one side of this. You talked about the lack of sales. People can't come in and do any business there. That's another part of it. And the costs are high. So you got such a bad situation for brick and mortar stores, Joe. And I don't like shopping, but I do like going to see the stuff I want to buy once in a while. But the online shopping, I'll have to say this: I do a lot more of that now than I ever have before. I've been drugged slowly into it, like when it comes to anything with technology. And yes, what was that number? 50,000 in the next 5 years, just going to evaporate. So that's a lot of empty buildings, man. That's a lot of empty buildings.
Yeah, and then Moody's Analytics, 20% of office space across major U.S. metro areas was unleased in the fourth quarter of 2023. That exceeds the previous all-time high. It was actually 19.6. The previous all-time high, 19.3. Now, I don't remember these. People remember the 86 crash. That was the last, the 86 crash, that 91 recession. That was the last time that vacancies hit that high of that 19.3. So we've actually taken it out. Even during the financial crisis and even during COVID, there was not this much commercial real estate vacant. So, Jason, there's, I think today we got a lot of what I'll call soft data, a lot of soft data that says, okay, this slowdown is starting to grow, and it's going to be very interesting. I can't wait to start looking at these bank earnings. I think we're going to learn a lot about how much are revenues down and how big are these loan loss provisions growing.
Yeah, well, I don't think 2024 is going to be a good year for banking or for a lot of industries, but you'll get those numbers, Joe, and we'll chew on them a little bit. Which is, I don't see how banking numbers can't get worse. I mean, tax revenue's been down for a while now, so the government and banking work hand in hand. Those two things usually are doing well together, and they struggle together. You know, one of the things during the '08 crash, when banking was dying in front of our eyes, the only profitable area in the entire country during the 08-09 crash was Washington, D.C. That was the only geographically profitable place, but they were way down. You know, Washington, D.C. was way down, but it was the only thing that went up in 08-09 geographically, but it was way down. So I think we got the same thing as far as that's concerned coming, Joe. Banking is going to be, you're going to have a lot less choices very, very soon, Joe.
Yeah, and again, having your money in the bank, it's just not the right place. And again, do I think you should have some of that with us? I do. Absolutely. Get your gold and silver put away. If you haven't done it yet, what are you waiting for? But there's other options, right? Why refi? Call Joey. Get your money somewhere that's not at a bank. Believe me when I tell you. And again, do we survive this year? I don't know. I got more information. So the next Treasury refunding. So we just finished the year at $34 trillion. What we didn't know is, well, we knew it here, right? The Treasury's checkbook keeps falling. So what is happening right now is the Treasury, because we spend so much money, they want to keep $750 billion in their checking account. They can't do it. So what happens is they get to 750, and then 90 days go by, and they're like, "Oh man, we're below 600 billion." But we've already, think about it. We tacked on almost $1 trillion of debt. But it was actually a little more than that because the Treasury's checkbook fell. The refunding date, at least the announcement, January 29th. We're going to hear from Janet Yellen how much money, how much debt they need to sell to get the checkbook back up close to that $750 billion range. Now, here's the good news. Janet Yellen knows, hey, I only need enough money to get me to April 15th, right? And then I can get some tax revenue. Now, unfortunately, January 29th, that's usually when people start getting their W-2s, and all the ones that get refunds, they usually file real soon, right? They file early. So we may get a sizable number that the Treasury's going to need to tack on. And that's something where, okay, boom, that's just going right to the debt. 100 billion, 150 billion, whatever that number is. The good news will be she'll probably say, hey, we're not going to need to do another refunding in the immediate future. Now, Wall Street will be all happy about that, right? Because we've done, what is this, the second or third refunding in like the last 5 months. But it's only because she knows April 15th is coming, and that'll buy her some time. But Jason, if she comes out and the refunding's bigger than what people expect, or heaven forbid she says, by the way, we're probably going to need to do another one, in June or July, Wall Street will look at that negatively.
Yeah, I think you're right on that for sure. The markets aren't going to do well this year, and I'll just say, except for one thing, and is that if the Fed starts to lower interest rates like they're planning on. But based off what you're saying here, just this information, Joe, the markets are not going to react well to that. The markets aren't going to react well to a lot of things in the coming months. But the only thing, Joe, is the one thing, and I actually worry about this, is the Fed dropping rates and how much are they going to drop it? Because in my mind, the inflation is much worse than they're saying it is. I'm looking at it around me; it's much worse, and we could see asset prices go up in an extremely unusual way, in which record gold prices, record Bitcoin, record stock market, record all this stuff, housing could go to records, and nobody will be buying it. Yeah, that's just counter to everything that hey, record prices means record buying. We could see a point, Joe, where record prices means no buying, and people don't understand this is what inflation does. It turns everything backwards.
800-951-0592. Jason and I, we're coming right back. Stay with us. 800-951-0592. Patriot Radio News Hour on this Wednesday. It appears, I think it's a good buying situation because of how they have the numbers kind of rigged. We're going to get CPI tomorrow, and I think no one's expecting a surprise to the upside, right? I think tomorrow will be, how low is it, right? And maybe you'll get a new lower low. But to Jason's point, they're not really tracking inflation to begin with. But I think we're going to see dollar weakness, probably see higher gold and silver prices, higher, I think anyway, higher stock prices. Now, we will get some earnings season numbers out, so that could affect things as well. But $10 Liberties, these are the old ones, 1866 to 1907. 1 through 9, $1,110. 10 or more, $1,100. You want to buy 50 of them, $1,095. You got gold sitting here around $2,033. What a great opportunity there. And then rolls of U.S. Silver Eagles. We got now about 20 rolls left here. Take advantage. Save the 20. Save the 20. Save the $30. $590 a roll at 800-951-0592. And I'm kind of torn because of where to go. I think you're going to hear a lot of this in 2024. California. Now put your state in here. California. Lawmakers are excited, Jason. Yeah, they're pretty fired up today because they're facing a huge budget deficit. And we talked about this. It's at $68 billion now, but here's the problem. They always, every couple of months they come, let's look at it now. And it always grows. Like I told you yesterday, Arizona, we're up to $1 billion. And they're saying, well, that's just until the next number comes out. It's going to be even bigger. California, I think they're going to have a budget deficit approaching $100 billion before it's all said and done. And their fiscal year ends at the end of June. Well, they're excited because lawmakers at the State Assembly's Revenue and Taxation Committee are now dusting off Assembly Bill 259. By the way, that was first introduced last year. They want to impose another tax. All this is going to do is, hey, last person out of California, turn the lights out. And I don't mean this in a bad way. Because who can afford to move? The rich. The rich can move. Most other people, right, this is going to be a problem. But here's the thing. As the rich leave, right, they're the ones that pay the most in taxes. They want to impose another 1.5% tax on assets, now listen to this, of Californians with a worldwide net worth of $1 billion. They want to do that this year. So if you're worth more than $1 billion, all the techies, right, the big tech execs, you know what they're going to do? They're just going to move. I don't know why they think this is going to work. It's not like they don't own houses all over the place, right? They'll just fill out a little card. They'll go to, they'll have their assistant go down to the post office and do a change of address for me, right? I've moved my house to wherever. A 1% tax on those with a net worth of $50 million globally. And Jason, unfortunately, even with that, that will come nowhere close to closing the budget deficits. And I think this is another leg. This is, for the last 3 years, states have been living high on the hog with COVID money, spending lots of money. States, municipalities, I think we're going to see a big slowdown because you got to remember now, most states, this is important, run July to June. The federal government runs October to September. They don't run the calendar year. So a lot of states, and they're not allowed, mostly the states, hey, we can't have a budget deficit. They're either going to need to borrow a ton of money before the end of the year. But the problem is the budgets for 2024, they're going to have to come way down.
Yep. Government is the number one business in this country. There's 25 or 24 million people officially working for government in this country. So if they're having trouble paying the bills for whatever reason, except for the federal government, you can't print your own money if you're California. And so anytime cuts happen, that means anybody that's not directly being paid by the government, the trash company or whatnot, they're going to cut back. So when any government is, and this is not the way it should be, but any government problems, statewide or nationwide, citywide, that's bad for the whole economy. Unfortunately, our military is one of the biggest, our government, which is one of the biggest funded businesses here in this country. And when you see what's going on in Washington, right, Joe? These are things that cause a lot of grief for everyone because government, unfortunately, is too ingrained into the economic fabric of this country.
How do you go that far into the hole this quickly? Right? I mean, the
budget. The budget was too big, and like you said, the money stopped coming. That's that. They didn't grow too much. They stopped getting the free money.
Yeah, right. They were all we got a $30 billion rainy day fund. Oh well, we're going to have $100 billion budget deficit this year. Oh, and by the way, in the next 5 months, we got to somehow pay for that. On top of what is the 20? Unlike we talk about the federal government. Yeah, they're new. Boy, they got real tough. We're going to cut $16 billion. It's almost laughable, right? Of how now, and again, here I'll be honest with you. There's not a lot that they can do. Medicare, Medicaid, defense, and interest on the debt. Right? That's the majority of the spending. Right? There's not, believe it or not, all these entitlement programs and all this other stuff. It doesn't even add up to what we pay in interest on the debt. But Jason, I just don't know how the math will work. I think we're going to. Here, I'm going to use a few things that I think you're going to see this year. The word tax increase is going to be spreading like wildfire in your cities, your counties, your states, and eventually, at some point, will hit the lips of your representatives up in D.C. Take the Radio News Hour, Jason and I. We'll be right back. 20-plus years. Do you think I can remember? Turn your mic on, right? I mean, it's like Radio 101, right? Turn the mic on. Remember when computers first came out and they wouldn't work, and you'd call tech support, and the first question when they would ask, "Is the power on?" Right? Right?
Yeah.
Let's just start with that. Do you have the power on?
The two mic thing is, you've only been doing that for less than a year, or about a year, so that's forgivable, because one mic is working, I just can't hear you, and half the audience isn't hearing you. So, the two mic thing is still brand new.
But my YouTube Rumble mic, I almost never turn that off, and if I do turn it off, it's an accident. And then my regular radio mic, I'm just used to that. During the break, I'll turn it off, because when we first started, going way back, we had no. It was Jason used to be literally the only person in the building at the radio station, and if he was answering a phone call or someone was at the door or getting a delivery, or just simply forgot to on the board to shut off the mics. If I left my mic on, you may hear my entire conversation during the break. I'm yelling at Arlene and Brittany and, hey, do this and call this, and so I always and just out of habit I shut it off, and lately been forgetting to turn it back. I know more information than you ever needed to know. Listen, it's a good day today. Gold's done really good here. I've been saying this for the last several weeks now, getting real comfortable now above $2,000, and that's really what that's a big number. It's a big number, and so that was kind of from a psychological standpoint, gold needed to get to that point where $2,000 now isn't a big number, right? It doesn't feel like a big number anymore, and I think we're seeing that play out. And 2024, it just lines up. It screams dollar weakness for 2024, which usually means higher gold and higher silver prices. And I think tomorrow everyone's getting kind of geeked up for this inflation number that we could see. Man, could we get a double hit here? Maybe a big jump in jobless claims. Hey, can we get a 20,000 jump in jobless claims on top of a low CPI number? We could really get a big pop. So I like the chances today. It doesn't matter. I mean, now that I've said it, watch. God and I have this relationship. He thinks he's hilarious. Who knows? It may go down tomorrow, but I like the chances today for people that like to, hey, I like to buy and have gold go up the next day. Because I always tell everybody, because they always say that one of the questions, especially the new buyers, is today a good day to buy? Right, Jason? Right?
Yep.
Is it a good time to buy right now? Should I buy right now? And I always answer it the same way. God's got a sense of humor. If you don't buy today, I promise you gold's going up tomorrow, right? If you do buy, it's going down tomorrow. But in the grand scheme of things, I like the setup here. $10 liberties, 1 through 9 at $1,110. 10 or more at $1,100. 50 or more at $1,095. And then, of course, the rolls of U.S. Silver Eagles below $600, $590 at 800, 951 0592. Jeff Gunlatch was out. Again, he's one of the guys I really like, and I think he nailed it. This is what he's expecting in 2024. High volatility. I think that's true. There's a lot to digest here. Right, we've got government shutdowns and continuing resolutions. We now know when the refunding date is for the Treasury markets. March is the end of the banking program, the emergency program. Right now, you know what? It's up to $141 billion, and it's going higher. I promise you this. They're going to borrow as much as they can between now and March. Because come March, the Federal Reserve said, hey, okay, at that point you can't borrow any more from this program. You still got to, pay it back, but we're going to stop you from borrowing more, which a lot of people, now if they hold to that, I think we're going to see a big jump. So already they've borrowed more money than the FDIC even has, right, in this facility. Because this is banks that have outflow requests. Right? That means either big depositors are still pulling their money, or their depositors as a whole, which is probably another good guess, just has less money in the bank. Right? They're working less hours. Right? Their income isn't keeping up with inflation. Their balances just keep falling. Or, hey, you know what? It's just people got to pay bills. People got to pay bills. We don't have the liquid cash right now to do it, and we don't want to sell our debt, our U.S. Treasuries, our mortgage-backed securities. We just talked about mortgages. We don't want to sell it because we'll take a huge loss. So the Fed has been allowing them to buy. That comes to an end in March. A lot of volatility, but I'll tell you what else he says besides volatility before we leave you today. Patriot Radio News Hour, final segment coming up. 800-951-0592, Patriot Radio News Hour. Joe and Jason wrapping it up here on this Wednesday. $10 liberties really quick again. $1,110. 10 or more, 1,100. 50 or more, 1,095. Gold is dead flat here. $2,033. Silver, dead flat. $23.08. The Dow's almost dead flat. It's up 30. Again, I think tomorrow is going to be moving day, and get it done today. Rolls of U.S. Silver Eagles, whatever we have left, at $590 a roll, 800-951-0592. So the year, not just of volatility, according to Jeff Gundlach, high volatility. He says, starting with declining rates. Now, I just talked about this emergency facility. Remember when SIV went under? This is what they came up with to keep more banks from going under. There's hundreds of banks that are insolvent right now. They're just in this facility. This facility ends in March. In other words, you can't borrow any more money. By the way, the people that use the facility first, that money's supposed to be paid back in March. If you borrowed it in April, right, you're only allowed to borrow it for 1 year. This is why a lot of people way smarter than me say this is why the Fed's going to cut rates. Because they need rates to go down so they can sell their debt to raise money without taking huge losses. And Jeff Gundlach is one of those. He says, listen, rates are going to decline not because inflation went away. No. Because the banks need to be able to liquefy their bad assets. And, of course, are Treasury bad assets? No. But if you got to sell them at a big loss, then yes. Then a recession. So first, he's saying that the Fed's going to be cutting rates. It's actually going to signify that we're going into a recession. Kind of like Jason said, things get weird. Right? Inflation ends up, prices are sky high, and no one can buy anything. Now you're talking about, well, rate hikes, rate cuts mean, hey, we're going to, pump our way out of this. Gundlach says no. Then he expects the recession response all in 2024. And, of course, gold's going to do good on declining rates. During that recession, right, You're going to see a lot of people going. Now, gold may fall there, but you'll see a lot of people going to gold and silver. It's the response side, right, Jason? That's usually when we see the big spikes. When did gold really spike during the financial crisis? It was the response from the Fed, bringing rates to zero, quantitative easing, right? Well, all of these things, I think we're going to see all of these things. I think we're going to see rate cuts, a recession. I think you're going to see the end of quantitative tightening. I wouldn't be surprised to actually see more quantitative easing. That would be very much a possibility. Higher gold and silver prices. 800-951-0592. Take the time, add to your portfolios today. Jason and I are coming right back with the Half